Are we approaching a housing market crash, or are we on a long term boom with no end in sight? For all of you who are thinking of selling or buying a home in Bend, Oregon, and are waiting in the wings, I'm here today to talk about what we are currently seeing in the market and what trends are showing for the future. It's time to break this down. Before I get too far in, my name is Carin Jackson, and I'm a realtor here in Bend, Oregon. I love helping people make the relocation process as smooth and effortless as possible. So if you are thinking about moving to Bend, Oregon, give me a call. I'd love to help you too. And if this is your first time to my channel, make sure you subscribe to get weekly videos all about Bend. And if you enjoyed this video, please give it a like. All right, let's talk about this crazy market we are in. The top question on most buyers and sellers' minds right now is if we are indeed in a housing bubble like back in 2006 and 2008. Although many of the same feelings are being generated by the spike in prices and reduction of inventory, the substance behind this market is very different than before. The follow up question is if this is a bubble that will burst. The short answer is no. The vast majority of experts are saying we are not in a housing bubble right now. Back in 2006, mortgage lenders were being reckless, and a lot has changed to restrict the kind of choices banks make when offering out rates and loans to home buyers. That is a huge difference between then and now. One thing that's causing the feelings of a bubble is the interweaving issues of low inventory, high sale prices, fluctuating mortgage rates, and the possibility of foreclosures looming in the future. So let's talk about all of these individually. First is the low inventory problem. With many relocating out of cities with condo spaces and into suburban single family home areas like Central Oregon, many would-be sellers are reluctant to put their properties up for sale and concerned that there wouldn't be another home to buy once they do. Locations like here in Bend are seeing a huge uptick in this scenario specifically, as we've turned this boomtown into a Zoom town with all our remote workers. Will we see this change anytime soon? More people are heading back to the workplace, which may lead to more people relocating for work and more homes being put on the market. That being said, who knows how long corporate America will allow people to work from home before having people return to offices, or if remote working is the phase of the future. That is an unknown. According to Ben Grabowski, president of data and analytics at Black Knight, a provider of innovative software, data, and analytics for the mortgage and home equity lending industry, when speaking earlier this year, any hopes of 2021 bringing an influx of homes to the market and lessening pressure on prices appear to be dashed for now. With higher interest rates and continuing shortage of inventory, it will be important to keep a careful eye on both home prices and affordability metrics in the coming months. Another point to this low inventory concern is the problems with the new construction market. Builders have been hit with extraordinarily high material costs due to the pandemic and manufacturing production concerns. Lumber pricing alone has gone up an astronomical 113% in the last year. Some subcontractors have seen their basic materials pricing skyrocket as well. And of course, that price hike goes directly to the homebuyer, making new builds more expensive and less incentivized with upgrades. High sale prices are also keeping the market feeling volatile. Any homeowner likes to see the value of their home increase. That's a given. However, it discourages movement to locations nearby within a city or suburban area, as what people can afford has not changed, even if the property values have gone up. At the end of the day, it's supply and demand. Low supply of homes, causing each home to be worth more. Will this change anytime soon? Probably not, as investors are coming in to flood the market. Why? Well, if you follow financial markets at all, you may have been hearing that the dollar has been losing value. This creates an environment where investors would prefer to place their capital into hard assets like real estate and gold, instead of unstable places like the stock market. 42% of homes are selling over the asking price nationally, which is 16% over last year at this same time. Most experts suggest that these metrics cannot sustain this level of growth indefinitely. Daryl Fairweather, Redfin's chief economist, suggests that sellers' prices may flatten as they typically do seasonally, with more natural ebbs and flows continue after this year. There has been a decline in mortgage purchase applications despite low mortgage rates. The lack of affordable homes causes down payments to be too high for first time or middle class buyers, keeping them from even trying to get into a home. Of course, some markets, like Bend most likely, won't see a loss at all due to the huge influx of people moving to those locations. But even smaller markets may not see tons of foreclosures because those investors I mentioned earlier are coming in to grab up any viable rental investment. This high demand for rentals and influx of investors could serve as a backstop for major price declines, says Ben Grabowski. Lastly, there's the issue of the looming foreclosure crisis. Last year, financial gurus like Susie Orman were suggesting a huge housing crash due to unemployment and the idea of so many foreclosures seeming imminent. Even Susan Orman isn't right every time. The mortgage forbearance program that was established to help bail out the Americans hit hardest by the pandemic will continue until the end of July 2021. Once there, anyone affected could ask for their program to be extended up to 6 months. Even then, the foreclosure process can take many months, if not years, to come to fruition, suggesting that a large wave or big burst will not actually happen for a long time, if at all. One thing the banks learned from the 2006 2008 crash is that it's better to try to keep that asset on the books and make it work with people. Homeowners have a ton of equity and could possibly refinance out of the situation, unlike people in 2006. If you've been sitting on the sidelines waiting for a perceived bubble to burst situation, you may be waiting for a long time. And in that time, home prices that have seen substantial gains may plateau. But property values should remain higher than they have been in previous years. It continues to be a seller's market, and if you do need to relocate for a job or want to upgrade your household, now may be an excellent time to do so. This situation might be in your favor if you may be merging your household with family members, creating a multi-generational living situation, and needing to upgrade. Or if you are planning to retire and would like to cash out while the market is high and downsize your living situation, your property values have never been better. What are your thoughts on the market? Do you think that there could be a change to inventory levels soon? Leave your comments below and be sure to contact me if you are searching in the Bend area for the perfect home. I'd be delighted to help. All of my information is below. And if you are considering the move to Bend, make sure you check out my video on the cost of living in Bend, Oregon. See you in the next one.